It was another record-setting day on Wall Street as we not only had a very interesting IPO from Robinhood here today, but in addition got some GDP news. GDP did come in at about 6.5% annualized. That was actually a little bit below what estimates were, but obviously a very strong number coming out of some of those COVID lows that we saw from a year ago. So we'll see what that means for our posture here this evening. And then we'll get into a trade application example on a stock that actually is reporting earnings after the bell here tonight, but the trade example was done during the normal session. So far, so good. The stock is off to the races. So we'll go ahead and take a look at a long call spread on stock that I have an interest in. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's July 29th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below and click on our description area to sign up for our email distribution list. In addition to that, we're heavy users of Twitter. Feel free to follow me if you're not doing so already. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook as well. Feel free to join us over there at that web address you see embedded in the logo in front of you. All right, let's go ahead and dive into today's trade activity. You can see here I've got a heat map pulled up of the Market Scholars 1000, which are the 1,000 stocks that we pay the most attention to here in my classes at Market Scholars, just to kind of give us a general sense of some of the bigger movers from an individual stock perspective today. Mentioned that the S&P 500 hit an all-time record, so you can anticipate that there's probably a lot of green to go along with that, and I would say that's mostly the case. You can see stocks like Tesla was up 4.69% today. We saw AMD with a very big 5% move today. Qualcomm was up 6% here today. Align Technologies, so a dental care company, was up about 8.86%, so another big mover there. We had Yum Brands, the company behind A&W restaurants, KFC, Pizza Hut, and the like, was up 6% here. We saw Zoom Video up 4.47%. We saw Tempur Sealy International, so some of the beds and mattress companies. This one was up 15% here today. I saw Sleep Number was up nicely today as well. So some pretty big movers out there on the green side of the market. In terms of downside movers, PayPal had a tough day. It was down 6.23%. Facebook also struggled, unfortunately. That's a stock we own in my top-down trend trading class. We actually talked about that in my question and answer session earlier today. So for those of you that are premium members, feel free to check out that recording if you're interested in my current thoughts on Facebook. But it was down 4% after reporting its earnings last night. We also saw Anheuser-Busch, ticker symbol BUD. It was down 5%. Some of you saw me tweeting about the beer companies versus the caffeine companies last week, and it looks like that's kind of continuing that trajectory where we're seeing a lot of the beer companies really struggling here lately, but a lot of the soda and coffee stocks doing pretty well more recently. We also saw one of the REITs struggling here today with Equinix, I should say, down about 6% there. So for the most part, a very strong day, way more green here on the board than red, so very happy to see the results here from a breadth perspective. Let's get into the specific charts now on a market forecast perspective. And you can see here I've got chart 4B pulled up for those of you following along at home on your own charting package, assuming you are a premium member of Market Scholars. You can see here that we have a lot of green on the board. We do have a brand new all-time high here on the S&P 500 that was hit today, and also on the Dow Jones Industrial Average. Now be aware that those are intraday highs. So as an example here on the Dow Jones Industrial Average, we did not have a closing high. This was actually a slightly higher closing high on July 26th, but on an intraday basis, we did barely nick just a new all-time high at the height of today's session before closing a little bit off of the highs by the time it was all said and done. And I think that's probably the case over here as well on the S&P 500. Let me just double check. Close on this date here on the 26th was 44.22, and yeah, we closed at 44.19 here, so just a little bit off of the closing all-time high, but we did tag new intraday all-time highs on both of those. NASDAQ didn't quite get to a new intraday high, but wasn't too far behind. All three of those indices could easily go to new all-time highs as soon as tomorrow. If, of course, we've got some good news in store. We'll just have to see. We are trading a little bit lower in the futures market right now as a result of some of the bigger companies reporting earnings after hours, including Amazon. But we've seen that type of behavior be offset by more positive earnings the following day. Remember, tomorrow morning we're going to get a whole new slew of brand new earnings coming out in the pre-bell session there, including some of those big oil companies, Chevron and Exxon. And then I also wanted to point out the Russell 2000 here. So the Russell 2000 was actually up the most of the four indices here today. It was up 0.68%. And you'll notice that we do have some new news to report here. We did have that strongly bearish posture on the Russell 2000 for the last couple of days, but with the last 2 days movement to the upside, you can see that the posture has now shifted back once again to weekly bullish. So it's kind of been going back and forth here more recently. We're kind of at an interesting point on the Russell 2000 where it's good to see that we've had some progress on a bullish perspective the last couple of days, but we're kind of still stuck right here below that falling 30-day moving average. Notice that moving average is still red in this case, so that means price is still below a falling moving average. Notice the difference of that compared to up here on these other three charts where we have green moving averages telling us that price is above a rising moving average. So from a trend trading perspective, it does seem like these other areas, especially the larger cap areas, are doing a little bit better in this current market environment compared to the small cap Russell 2000. Nonetheless, things do look better. On Tuesday when I was with you, I wasn't particularly enthusiastic about this candle that I saw here, so I'm glad to see the market kind of calming down a little bit. We've had some more positive news on the China front, I would say, as well, or at least a simmering down of tensions, and so I think that's kind of allowed the markets to more naturally rise here the last couple of days as well. But that's a story where you just don't know what you're going to find when you wake up in the morning here in the United States, whether some big news event over in China is going to be affecting us. So I don't think that story is done with quite yet, but so far so good for the last couple of days. No major upsets there. So Russell 2000 continues to be the one that I would have the most concerns about, because we still have a pretty sloppy looking chart here trading below that falling moving average. But the good news is our posture from a market forecast perspective did shift back to weekly bullish. You'll notice here on the intermediate line, it's at 45 and rising. Remember, if it were to continue rising and get above 50, we would then see this background color go from this light green background to this darker green background color, telling us that we would then have a strongly bullish posture. But we'll just have to see what tomorrow has in store for us there. On the other three charts, we do have strongly bullish postures across the board. And remember, that's been the case for the last week for all three of those charts. So that's not anything new that I'm reporting there, just a continuation of what we already knew. So it's kind of good to see these other indices pulling the Russell 2000 up, kicking and screaming perhaps, but nonetheless pulling it up and kind of helping the bulls win the day here, at least in the United States. Just to put a ribbon on it or a bow on it, be aware that the S&P 500 was up 0.42% today, Dow Jones Industrial Average was up 0.44% today, and the NASDAQ Composite was just barely above break even. It was up 0.11% today. So all in all, a pretty good day for the bulls out there on Wall Street. Let's take a look at our three green arrow status now. This will be chart 4D for those of you that are following along at home. And here it's kind of the same story that we reviewed when I was with you on Tuesday, which is we've got green background colors on three of our charts. Remember, on this charting setup, it means that we have what's known as a three green arrows signal. That's just colorful language to discuss three different technical indicators that are all set up bullishly at the same time. And those three indicators include the 30-day moving average, the MACD histogram, and the stochastic. So the only one that does not currently have that bullish signal is the Russell 2000, and it's for the same reason that I mentioned on Tuesday. I did mention on Tuesday that we did have 2 green arrows, so that was kind of a positive element of the chart. I wasn't overly enthusiastic about how it looked that day, but I did acknowledge that we did have 2 out of 3 green arrows. Well, that's still the case. We still have the green arrow on the MACD histogram. We still have the green arrow on the stochastic, but we're waiting for that 3rd green arrow to show up here if we got enough oomph, enough energy to push that small cap index back up above that moving average. The last time it approached it back here on July 12th, it rejected it and it fell after that. So that's what we're all waiting on right now, if it's going to behave that same way going forward, or whether we've got an end of summer rally that we've got an opportunity to sink our teeth into. So we'll let you know as soon as we see anything on that front that changes, but right now that is the concern, that perhaps that 30-day moving average could be used as resistance, and the other charts don't really have that same chart shape. So the other ones are less concerning at this point, but if that changes to the negative side, of course we'll alert you to that here in this video as well. Let's take a look at our 1040 crossover method now. That'll be chart 4C. And as you're pulling this up here, you can see that we've got a lot of green from this perspective as well. Reminder that on this chart 4C, we're looking at 3 years worth of data on each one of these charts. So it takes us back a little bit longer in time to give us a longer term view compared to what we were just looking at a moment ago with only 3 months worth of data. Each one of the candles here represents a week in time as well. So what we're looking for are crossovers of the moving averages themselves. The orange moving average is a 10-week moving average. The blue moving average is a 40-week moving average. And as you can see, we continue to be gliding in the right direction. In other words, higher and higher with the blue line firmly below the orange line on the S&P 500 and on the Dow Jones Industrial Average and on the NASDAQ Composite. The one that's a little bit more concerning is here on the Russell 2000. You can see that these lines are being pinched a little bit more here recently. We can see that down below with the PPO sliding as well. So we don't have a signal change yet, but we do have maybe a heads up that if we are to see a 1040 crossover go to a death cross as opposed to the current status of a golden cross, that the Russell 2000 right now appears to be the one that's most likely to see a death cross first. But remember, these signals do not occur very often. They might happen once every 6 months or so. So it's not something where we come in here and we expect a big change every time we look at it. It's more of just an understanding of where things stand from a longer term perspective. And for the most part, longer term investors have been well served to be involved in the market to the long side over the last several months. And that's what our charts continue to show at this moment in time. All right, let's go ahead and pop on over here to the internet briefly. I always like to get a chance to say thank you to those of you that help support this Market Outlook video on social media, particularly Twitter. I generally strive to get at least 100 likes on Twitter, and 103 of you came through for me last time around, so I appreciate that. Anytime I get more than 100 likes, I will prioritize doing this video. If I get under 100 likes, then I'll just have to see what my schedule looks like that particular day. So I would encourage you to support the video each and every day if you have the capacity to do it. For those of you that know how to click like, you'll know that it only takes you 5 seconds. So for those of you that helped support it last time, including Anish and Jim and Edward and Paul and Ken, Ed, Kirk, John, Evan, Ken, Dave, Serene, Craig, Margie, Donald, Rick, Ron, Dennis, Bob, looks like Teddy, Tat, Randy, Sunita, Pam, everybody here. There's too many to name, but I see ya. I see y'all. I know you're supporting us, and I appreciate it. It goes a long way in helping us justify the time that gets spent recording these videos each and every day. So thank you very much for your support there. Please continue to keep that up. Also, while we're over here, I wanted to share a few things that I've been tweeting out today to those of you that follow me on Twitter. Again, you can follow me at Brandon Van Zee. For those of you that are on the web on a web-based device like a desktop computer or a laptop computer, you can go to twitter.com/Brandon Van Zee. Otherwise, many of you will access this on your mobile applications as well. But anyway, mentioned here that CRISPR came out with their earnings after hours here this evening. One thing that caught my eye is that it was interesting to see them discuss their in vivo CRISPR gene editing plans directly in the press release. And I think that they're probably trying to tap into the enthusiasm from Intellia's excellent news on that from last month. And so the first quarter result did not show that. The first quarter result only showed their regenerative medicine, and they didn't talk about their in vivo programs here in this amount of detail. So I kind of mentioned that over here as well, that they actually, here's what the first quarter's report looked like, where they only discuss the regenerative medicine, but they're not specifically mentioning their specific plans around in vivo. But then on this most recent report that they just issued tonight after the bell, they include that language up here now, and in vivo programs. And of course that means doing the gene editing within the body itself. Up until this point, CRISPR itself, CRISPR Therapeutics in this case, had been doing most of their gene editing work outside of the body. So in other words, extracting the cells, editing them, and then putting them back into the body, where they've helped cure sickle cell disease and beta thalassemia and different things like that. So this is a little bit of a different kind of focus that they are sharing with their audience right now. So I found that to be kind of interesting. We'll get into this a little bit more here later in the video tonight. Also, I wanted to share with you that after the bell, we did get a number of companies coming out with dividend increases. So KLA Tencor came out and increased their dividend by 17% after hours. Skyworks came out and increased their dividend by 12% after hours. And Republic Services, the garbage company, but certainly not a trashy stock, like I say here. The garbage company, Republic Services, did increase their dividend by 8% there as well. So good to see all those companies come out not only with earnings, but also announcements of dividend increases. Some of those companies are trading a little bit lower after announcing their earnings, but positive to see that their business operations are strong enough to justify dividend increases going forward for their shareholders. Let's get on back on over here to the Thinkorswim platform. Also wanted to spend some time looking at Amazon in this case. Amazon's getting hammered after hours here today. They are down a couple $100 per share. Now, keep in mind this is a $3,600 stock, so it probably sounds worse than it is when you say it that way. But still, we're talking about a 6 or 7% decline here on one of the most important companies in the stock market after they announced their earnings. And so that's going to be a big reason that if you look at the S&P 500 after the bell tonight, it's down a little bit. It's not down dramatically, but if you look at the SPY, you'll see that it was trading at 440, and it's now trading at 439. So down just a touch after hours, and I think most of that is as a result of Amazon. Remember, the S&P 500 is a market cap weighted index. And so a stock like Amazon, that's one of the 5 largest companies in the S&P 500, is going to have much more of an influence than other companies that are out there perhaps reporting more positive earnings. So Amazon looking pretty ugly. Another stock looking kind of ugly after hours is Pinterest. We had Snapchat do fantastically well last week on their earnings announcement, and then we came in and saw Facebook kind of muddle things up here in the last 24 hours, and then Pinterest really dropped the ball, apparently, if you're looking at the market's reaction at least. Pinterest closed the session today at $72. It's trading down at $58 right now. That is a massive haircut, even on a percentage basis there for Pinterest. So that's not helping the futures along at all there either. Another company that reported after hours is T-Mobile. T-Mobile is down just a hair. It's not down very much. Let's call it flat. It closed the session at 144.63, and that last trade on it was 143.18. So they came out and didn't really cause a whole lot of excitement in either direction, apparently. We also had Gilead report their earnings tonight, which is a big biotech company, of course. coming into its own in the last year or two because of some of its COVID-19 drugs where it tried to help. It wasn't a vaccine per se, but did have some assistance there during the initial coronavirus pandemic, panic that was taking place here with their remdesivir drug. But anyway, remdesivir sales were up a lot, and that probably tells us that there's a few more people getting hospitalized as a result of the variants that are out there as well. But the stock is down a little bit after hours as well. Not a huge deal, but down about $1 after hours there on Gilead. So those are some of your reports after hours, most of them to the downside. So again, not a big surprise at this moment in time to see the futures markets down. Let's go ahead and get back on over here to our charts now, and let's do some 12 grid analysis, starting with chart 5A. And as we're looking at chart 5A here, a reminder that the background colors of these 12 grid charts are going to be either pink or green, depending upon whether the posture is currently bearish or bullish, according to the intermediate line on the market forecast technical indicator. So as we can see here, we've got quite a few green charts on this first batch of 12. One of them that stands out, of course, that we talked about on Tuesday as well, is EEM up here on the top. So I had mentioned on Tuesday how this one could be a candidate for a short-term reversal higher because we had these oversold cluster signals. And wouldn't you know, the last 2 days have been fantastic for EEM, really pushing back higher. Now, also keep in mind what I also mentioned Tuesday, which is it would not be surprising to see a short-term pop back higher, but the assumption should not be that we are all of a sudden going to change the trend. Now, it is true, stocks do go up more often than they go down. So whenever possible, if you don't know the answer, you should always assume that stocks will go up because you're going to be right more often than wrong when you say something like that. But in this case, we did a lot of damage to this chart on EEM. Granted, a lot of it was directly as a result of China. Most of the other emerging markets are hanging in there just fine, but China in particular is causing a lot of stress in the system, and they are the most important emerging market out there because of their size and the amount of market cap that some of their companies have. Stocks like Tencent and Baidu and Alibaba and those types of companies. So anyway, it is good to see us kind of get out of that predicament here in the last couple of days and see a little bit of pressure release there in EEM. But I think the story's not quite done yet. We'll just have to see what the next move is out of the Chinese government. If they continue to start locking down their technology companies and coming up with creative consequences for their own companies the way that they have in the last 3 or 4 weeks, then we would likely continue to see some pressure there in EEM. The chart doesn't look great right now. Obviously, still has a strongly bearish posture according to that background color there being that dark pink. But at least we are seeing a little bit of a pressure release here more recently. Most of the other charts look pretty good. I would say the other one that is starting to show some slippage here is actually the US dollar. Now remember, the dollar has been pretty strong since having all of these oversold cluster signals back here in kind of that May time period, and then it kind of took off and has been strong ever since. Well, today kind of changed the feel of that chart all of a sudden on UUP in the lower left-hand corner here. Yesterday was also a pretty ugly day, but you had that possibility of it bouncing up and off of that rising moving average. Well, today showed us that chart had no interest in doing that. Instead, it sliced straight through it, actually gapped lower, and now has that weekly bearish background color. So it doesn't look nearly as bad as EEM up here. Nonetheless, that does feel like a fairly important change that we're seeing there on the US dollar. Remember, when the US dollar is weak, it tends to help commodities a little bit more so. And you can see here that gold was up 1.1% today. You can also see that oil was up 1.8% today in the commodity world there. So I want to keep my eyes here on gold because we're back up at that kind of resistance point where we traded up to back on July 14th, and it kind of stalled out right there. But this is a big jump there for gold, and so I would not be surprised if it can start making its way higher again. And if so, that one might not do so good for my bear call spread that I had from gold. So I'm going to keep my eye on that one. I did notice a lot of materials companies in general were up today. Even other companies like steel companies, as an example, were doing well. It wasn't just the gold miners. And so I think a lot of that plays into that falling dollar right there. That was a big move in the dollar. So where we stand with gold is we have a weekly bullish posture. Where we stand with oil is it's a strongly bullish posture. I also like the way that high yield bonds are acting. Keep in mind that interest rates have been falling recently. 10-year ended at 1.26% here today. But more importantly, oil has stabilized. You guys have heard me say repeatedly here in these presentations that oil and high yield bonds are very correlated to each other right now. It's not always the case, but right now the companies, the corporations in the United States in particular, that have had to raise high yield debt have typically been the oil and gas companies that are on the brink of disaster, right? Because oil prices have been so terrible in recent years. And so this is case in point of that. If you didn't believe me before, I hope you believe me now, because you can see that high yield bonds absolutely got torpedoed here a couple of weeks ago. Notice what was happening at the exact same time with oil. Notice, on the other hand, if you think, well, no, I still think that high yield bonds act more like bonds, not like oil. Well, look at these other charts to the left of it. Here's your U.S. government bonds over here. Here's your foreign bonds right here. And neither one of them do you see this massive drop the way that you did over here. So right now, it's still my belief that high yield bonds are highly correlated to what's happening with oil prices. And now that oil prices have surged back above their rising 30-day moving average, no surprise, we now see high-yield bonds surging above their rising moving average again and having that strongly bullish background color. Let's take a look at some sectors now. So over here on the sector 12 grid, which is chart 5C, of course, with today being a strong day for the overall markets, not a surprise to see so much green here on the board today. We actually only had a couple of sectors that were lower. One of them was communications. Remember, this is the market cap weighted version of communications. So because Facebook was struggling today, that had a big influence on XLC. In this case, it was down 1% here today. But that chart still looks pretty strong there. We also had real estate down just a little bit, 0.3%, but obviously still a strong performer in its own right there as well. In terms of the biggest winners here today, we had a few of them that were up over 1%. It looks like the biggest winner was discretionary. Now remember, on that heat map at the beginning of tonight's session, I showed you that Tesla was one of the leading areas. And so Tesla is one of the three most important discretionary companies right now. So I have a feeling that added quite a bit to that 1.13% upward move in XLY today. But keep in mind, Amazon is even more important than Tesla, so we could easily see discretionary giving that back tomorrow. So just be on the lookout for that if these lows on Amazon do tend to hold here that we're seeing after hours. The other two areas that also saw a very good day were financials and materials. Notice that financials now got up above their falling moving average, so that's a positive sign. We also saw the same thing there with materials. So those were areas that were really struggling here a couple of weeks ago. We've seen much more constructive price action here more recently. So that's an area to look for perhaps opportunities if you don't have some exposure in those areas. For our purposes in my top-down trend trading class, we're filled to the gills on financial stocks right now, but we've actually had to liquidate a few of our materials. We still have some materials companies like Steel Dynamics, so we benefited from that position today, but some of our materials companies have had to go to the wayside here recently because that chart had been breaking down. So now it makes me wonder, okay, are these things coming back to life again? And if so, who are going to be some of the leading areas within those materials areas there? there. Another chart I should point out is that healthcare looks fantastic here. Take a look at the chart in the lower left-hand corner. That's a very strong trend that healthcare is in. Mentioning that right now because we are about to go into our trade application example for the day. And for that, I'm going to pull up chart 3A, our swing trading chart. And I'm going to pull up CRSP. Yes, it's another CRISPR company. Those of you that have followed me on Twitter or are attending my classes here in the premium classes at Market Scholars, you'll know that I am an enthusiastic supporter of CRISPR technology. And even here in this presentation, we've traded a few CRISPR stocks. This one is actually called CRISPR Therapeutics, so they have the benefit of having their company name named after the technology that a lot of companies are trying to harness. So a lot of people tend to think of this one right out of the gate there. But remember, we've also traded, and we actually have trades on right now in Editas, and we also have trades on right now in Intelia. So Editas is just EDIT, and then Intelia is NTLA. And in both of those cases, we're doing pretty well. With Intelia, remember, we have a sold put on going right now. It's the $100 put that we sold for the month of August. One thing I wanted to point out about this is we're making $57 on this sold put so far. Remember, we sold it at 110. It's currently worth 52 cents. Remember, in this type of a trade, you want to sell something expensive and eventually buy it back cheap. So when that price goes down, we like that, and that's where we make our profits. So right now, we've captured about 52% of the potential 100% of profits that is available to us in that trade. But one thing I wanted to point out with that trade is that the day we did it, notice that was on July 8th. July 8th. I want to show you on the chart, July 8th was right here. Now on that day, remember, we already had the Editas trade going on. And I was explaining during that video that night that I was, in this case, rather than buying calls the way that I did with Editas, instead I wanted to sell a put here because it was a difference of us buying calls on Editas when it was bouncing off of a moving average versus, in this case, doing something bullish after it had already moved higher. So at this point, we put on a bullish trade, but we put on a much more conservative bullish trade. Rather than buying calls, we did a smarter trade in this case by selling a put. I say that because this stock, NTLA, has actually gone down since that day. Remember, we did a bullish trade, yet we are making $57, which of course is just a nominal amount because we just do one contract for educational purposes here. But the point is it's a 52% return on the possible 100% that we could seek out with that trade. So it's just a reminder that those of you that don't have an options education, that's something that I would encourage you to take advantage of, because this is case in point where you could be wrong on your analysis and you might think that a stock is going to go up and do a bullish trade like a sold put, and instead it goes down like this one has. It's gone down from 147 or whatever it was down here to 137. It's actually gone down $10 per share since that day, yet we are making money on this trade because we did the proper trade selection. Right? It wasn't necessarily the proper ticker symbol selection, but it was the proper trade selection here. And then the same thing I wanted to show you here on Editas. Remember, that was the one that we did back here on June 15th. And this was the one that I described it as covered call on steroids. And the idea behind that trade is buying a call right here, on this one, the 35 January 2023s. Remember, this is a LEAPS contract right here, where we bought this longer dated call, and then we sold a August $50 call against it. So in one case, we are long a call. In another case, we are short a call. Well, notice what's happening at this moment in time. Despite having opposing thoughts there where we're long one and we're short one, we're actually making money on both of those trades, right? We're up $490 on our long call, and we're actually making $10 on our short call. This has been a crazy ride with this company since we got into it, because we got into it here on June 15th. We go back over here to the charts. June 15th was this day right here. those CRISPR stocks started taking off that week before, and I took advantage of this sharp sell-off right here to do one of these bullish trades in the video, and that was the trade that I decided to do. I had no idea that this stock was going to absolutely erupt after that. Remember, we had the $50 sold call, so when it went up here to 60, it was a peculiar feeling knowing that this trade is working so good, it was almost uncomfortable because we knew we were going to have to maybe let go of our trade really early. Well, as we continue to let the trade work, this stock has come back in, and now that sold $50 call that we had is actually making us money again. Plus, we are still making money on the long calls because this stock, in this case, has gone up from $35 to about $42 here more recently. So in that case, I think we're in pretty good shape there on Editas right now as well. We do have an earnings announcement coming up. So those are the two CRISPR trades that we have currently in this market outlook video that I've done for you. I'm a big fan of CRISPR. I think those types of companies, CRISPR gene editing companies, have a very bright future. It's probably going to be a very volatile future because many of these companies don't have actual products on the market yet. So it is not going to be for the faint of heart. But having said that, what I have going for us here now today is a trade on CRISPR itself, CRISPR Therapeutics, CRSP. This is the one I mentioned earlier that just reported earnings here tonight after the bell. Now, in this case, remember, I already did the trade while the market was open today. So back over here, you can see this trade was done in kind of military time, I suppose here, 13:44. But it was basically 15 minutes before the stock market closed. And what I did was a long call vertical spread for the month of September. In the long portion of that spread is the 115, and the short portion of that spread is the 120. And I was able to get that done at a $2.50 debit. And that seemed to be a very good price for that spread. I like to get those situations where I'm risking as much as I can make. Remember, on a $5 wide spread like this, you have that opportunity. So anyway, I did see that that spread was getting filled at that price for the final 15 minutes of trade as well on several occasions. So it wasn't some pie in the sky idea there, but it was trading under 119 at that time. It actually closed right at 119 with tonight's session. But you can see what's happened here after hours. The stock is now trading above 125. So I wanted to make a point that this is the reason those of you that are premium members of Market Scholars have such a benefit to receive the trade notifications that David and I send you via the Telegram app itself. Because you would have received an alert with 15 minutes to go in the normal market session that I did this bullish trade on this security. And obviously, if you waited until the next day to do it, like everybody else who's watching the free video has to, they're going to miss this trade, right? This stock is already up $6 per share after hours after having reported their earnings there. Now, I didn't know that they were going to come out and beat earnings or anything along those lines, but this is a good example of why that can happen. And the sooner you get your information, the faster you can evaluate that information to determine whether you want to take the trade or not. So a reminder for those of you that are not currently premium members of Market Scholars, if you're interested in that concept and you want to be alerted anytime David and I are placing trades for these market outlook videos or for our premium trading rooms, you can come over to our website. Just go to marketscholars.com/pricing, or just go to marketscholars.com and just click on our pricing tab right here, and it'll pull up this area. It's this area right here, the real-time trade alerts in the premium area, that would benefit you there. So the plus members and the basic members, they do not have access to that, but if you become a 3-year premium member and decide to be with us for the next 3 years, you would have that as one of the key benefits of that subscription. Now, the reason that I had done this trade and why I was comfortable doing it was because this stock set up a pretty unique situation here, where we had what was known as a bullish near-term divergence. You'll notice down below here, we've got this blue line on chart 3A for those of you that are premium members. This is another benefit all of you premium members get, is access to our 50-plus charts that we have out there. I'll be making some updates to some of those charts, by the way, over the weekend, especially of our top-down trend trading ones. But anyway, notice that we've got this this drop in the blue line right here on July 14th, it looks like. And then we had a follow-up drop in the blue line here on July 26th. Well, notice this second drop is higher than this first drop. At the same time, notice that price continued to go down. So the two levels that was associated with is this candle right here when we're crossing through the moving average, and then also this candle right here where we've got this cluster signal on the 26th. So notice that price went down at a time when the underlying indicator showed an improvement. Now notice we also got what was known as an oversold cluster signal on that second bottom, telling us that the selling had become too extreme to the downside and there may be a chance for a reversion to the mean type of a trade in the short term. And so, at this moment in time, we're in reasonably good shape. As I mentioned, the bid here right now is at $125.10, and the ask is at $125.50 after hours. So in other words, it's up $6 per share from where the normal session closed here today. That's very good for our trade because remember, I did the 115-120 long call spread, which is a directional trade. And my ideal scenario is that the stock trades above 120 into the September expiration. And if that's the case, then I have a chance to make max gain on that trade, which would end up being a 100% return on risk. Remember, with a $5 wide, when you spend $2.50 out of your pocket to access that $5, you basically have $2.50 that you're spending to make $2.50 access with the rest of that $5 spread. So it's a 100% return on the risk that you are taking with that trade. So that's the good news. We're looking like we're in great shape after hours here tonight. The bad news is the trade will have to go all the way out till September. So we'll see if it can hold on to its gains between now and then. But so far so good. I am happy to see that excellent move out of CRISPR Therapeutics there after hours. So forgive me for spending so much time on these CRISPR trades, but I thought they kind of represented a great way for us to think about this very innovative area of the marketplace and how we think about it from three different bullish trades perspective, right? With the Editas trade, it was a long call trade which has big upside potential, but we also sold a call against it to form a diagonal spread in order to kind of offset some of our costs. With Intelia, we sold a put on it, which is not an aggressive trade, but it does have an above average ability to see profits. And it also allows some flexibility where you could actually see your stock go lower a little bit and still make money off of that. And then in this case here tonight with CRISPR Therapeutics, it was a long call spread where if you hit that right directionally, you can make some pretty decent returns on risk. In this case, 100% return on risk is the possibility here. So hope you enjoyed that. If you did get some value out of tonight's conversation, I ask one simple thing out of you. Just go over to Twitter and click like there for me. Remember, if I get at least 100 likes, I will prioritize doing this video again next Tuesday. If I don't get 100 likes, then I'll just have to see what my schedule holds on that particular day. But I know many of you do go out of your way to take the 5 seconds to say thank you and to encourage us to continue to put the hours that we do into this very free video that we have for y'all here on YouTube. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.